Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. All we ask in return, please refer a friend. Today we'll be looking at the cash flow statement. As we do in each one of these fundamental analysis tutorial videos, I'll give you the actual definition and then we'll go on to look at some examples and give you more insight. The cash flow statement as of 1987 is one of the quarterly financial reports publicly traded companies are required to disclose to the SEC, investors, and the public. The cash flow statement provides information on all cash inflows and outflows. This allows investors to see how a company is generating and spending its cash. For this example, we'll be looking at the Walmart Stores Incorporated cash flow statement, the annual data right here. And I'm finding this information on Yahoo Finance right here. You can find this information anywhere from Google Finance, Yahoo Finance, MSN. Your discount brokers will have it available for you. You can also find it on the individual company's website, the publicly traded company's website, in their annual reports, or again, like posts on their websites in many cases. So you can find this information basically anywhere. This is just what I'm using because everybody has access to this. They know where Yahoo Finance is, and so we'll be using this. Okay. First thing you want to know about a cash flow statement, of course, is it comes out every quarter, so you can have you can get quarterly data there, or you can look at the annual data. Right now we're looking at the annual data, and whenever you're looking at a cash flow statement, you'll typically see different time periods reflected here. In this case, you can see January 30, 2012, and then here January 30, 2011, and we go a little bit further over, you'll see 2010. So you're looking at year by year here, and this is important because you can get comparisons and see what they did the year before, and then to the current, and so you can kind of get an idea of the trend that's going on there. Let's clean that up right quick. Again, I want to point out anytime that you're looking at the information on cash flow, balance sheet, or income statement, a lot of times accountants want to save space, so what they're going to do is they're going to cut off any excess zeros. So in this case, they have all these numbers are reported in thousands. So whenever you see, in this case here, you could read this as 8.1 million. You need to actually add 3 zeros to it, so it's actually $8.1 billion here. The cash flow statement, as you may have already know, it's basically designed to tell investors what the company is doing to produce cash or spend their cash. And so that's an important little piece of the puzzle for you. Whenever you're investing, you know that the income statement, if you watched our video tutorials covering the income statement, you know that the income statement gives you all kinds of information, but not all of it's going to be a real cash inflow or cash outflow. It could be credit. So there's something to think about whenever you're looking at an income statement. You have to know that. And again, I hope that you have already analyzed or gone through our income statement tutorials as well as our balance sheet tutorials, and we'll be picking up where we left off there. So a couple of situations I'll repeat myself, but I really recommend you watch the others before we get started. Now, the cash flow statement is broken up into 3 main parts, and this is the 3 ways that a company can make money. So let's get into that. First one, of course, is going to be from the actual operating activities, and this was going to be right here. Just take this like so, and this information is right there. And that's basically just the company running its business, selling its services or its products. And then when they do these things, they either generate cash flow or they spend cash flow. And we want to know how this is happening, what's going on. So we're going to break each one of these items down line by line in video and show you what each one of these means and what it might tell the investor. But the main thing right now is just to give you an overview, and the start would be that the cash flow statement is broken into 3 parts, starting with the operating activities. That's what the cash flow is provided by or used in the operating activities. And then we'll move on to the second section, which would be the investing activities right here. And then we'll just take this part here, and that's going to be that. And then, of course, we get the third section, which is financing. Let's go ahead and clear that up so we can scroll on down. Move on down to the financing section. All right. And here's the financing section. Whenever you're considering the financing, it's going to be where another section that companies use to generate capital for running their business or expanding their business. In this section, you will also have shareholders' equity items there, such as dividends being paid or shares being purchased back or sold. So we'll get into all those line by line, but the main thing is those are the 3 different ways that a company can generate cash, either through financing, through investing, or through running their business through the operating activities. Please take a moment to review our disclaimer. The information provided herein is our opinion only. Under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of an investment.
You are responsible for your own due diligence. To summarize, we do not provide investment advice, nor do we make any claims or promises that any information here will lead to a profit, loss, or any other result. These videos are for educational purposes only.